what does the future of Bitcoin hold? And do you think it's too late to opt in? And I'm interested in, I know I have my opinions, but what are your drivers for the price over the next few years?
Well, I definitely don't have a crystal ball, but I think, at least from a framing perspective, I'll tell you how I think about it. I think about the first chapter of Bitcoin as kind of the genesis block until, let's call it now. And that's been all about Bitcoin, the asset, which is really the theme of this conference. And what's driving right now accelerating institutional adoption is the view of Bitcoin being de-risked. Right? And I think that's why you're just going to see a wall of money. I know it. I have an order book. A wall of money coming into the asset class. So let me put you to sort of frame this out in the mind of an institutional investor. Me. Okay, I'll put you in my mind. My partners and I bought more Bitcoin in 2020, last year, than in 2013 through 2019 combined. And as our fiat businesses continue to inflate and accelerate, which they are, I expect we'll buy more Bitcoin in the next 2 years and than we did in the previous 8. So what's going on? I mean, we're conservative, institutional, professional risk managers. It's what we do for a living, and it's why investors, including the most conservative investors in the world, have entrusted us with $20 billion in our alternative businesses, our non-Bitcoin businesses. And to us, conservative us, Bitcoin is de-risked. Why? Well, when I look at Bitcoin, I see it above $500 billion of market cap. I see millions of people using it every day with a clear line of sight to tens of millions of people using it every day, and then billions. I see 12 years of uninterrupted, safe operation of the network. When I look at all that, the left tail of the zero outcome is gone. And that is the key observation. So when I talked to institutional investors a few years ago, I would get the question, what's the chance of Bitcoin going to zero? And a few years ago, that was an interesting conversation. Last week, a client asked me, what's the chances of Bitcoin going to zero? I said, what's the chances of Christianity going to zero? It's just not. It's just left. It's left the station. And so remember, at Stone Ridge, we are risk managers. We do it professionally. And what you're talking about here with Bitcoin is an extraordinarily asymmetric upside asset. We can debate whether it's good or bad, but I think we can't debate the asymmetric upside to it. It's perhaps the most asymmetric potential right tail asset in the world, in history. And you chop off the left tail, we all know what happens, right? To the mean, it just explodes. It explodes. You chop off the left tail, the mean explodes. And you combine that with the macro environment, the money printing presses running at full tilt. I mean, the blue wave in the US, complete political dysfunction around the world. I mean, for us, at least at Stone Ridge, Fiat Reserves are like a hot potato in our hand. We make them in this business. We can't get them out of our hands fast enough and put them into Bitcoin. We can convert them as quickly as possible. So yeah, we're risk managers at Stone Ridge, but we're also capital allocators. You can't eat risk management. You can eat making money in the markets. And we believe in the power of Bitcoin, but if we didn't think we'd make money, we wouldn't invest a penny.
So you're calling chapter 1 of Bitcoin 2009 through today, Bitcoin the asset. And I guess that really is the process of going from 0 to 1. Bitcoin didn't exist, now it does. What's chapter 2?
Well, I think chapter 2 is going to be incredibly exciting. And chapter 2 builds on Bitcoin the asset, and it adds Bitcoin the network. In chapter 2, Bitcoin the network, it solely leverages Bitcoin's proprietariness as an open source monetary network. In chapter 1, we reached millions. In chapter 2, we're going to reach billions, and we're going to do it quickly. And chapter 2 starts right now. So I'll give you a flavor of chapter 2. Say I want to send $1,000, I'm sitting in New York right now, to a friend in Milan, Italy. Strike, Jack Mahler's firm, working with NYDIG, takes my dollars and delivers them to my Milan friend in euros instantly and for free. What? How did this happen? So let's go slow. First, Strike takes my dollars from my bank account, my $1,000, and they debit it. That's a millisecond. Second, Strike works with NYDIG and we do a trade. We convert the $1,000 into Bitcoin. It's another millisecond or two. Third, Strike works with Lightning Labs, and it zips the Bitcoin across the Atlantic Ocean to Milan. We're still in single-digit milliseconds, basically instantly. Over there's another FX trade. NYDIG converts that Bitcoin into euros. We're still in milliseconds. And finally, Strike credits my friend's bank account with final settlement in euros. Done. So what just happened? What just happened is $1,000 were moved from me in New York to my friend in Milan and converted to euros instantly and for free. How? Because for the first time in history, we have an electronic bearer asset. We've never had an electronic bearer asset. It's called Bitcoin. And an open source monetary network, which we've never had before. It's also called Bitcoin. That together can achieve cash finality anywhere in the world, anytime, 24/7, 365, with liquidity in any currency pair you care about. And notice something critical in the transaction I described, critical. The volatility of Bitcoin, the asset, was nowhere to be found. Why? Because we didn't use it. We didn't use Bitcoin for its properties as an asset. We used Bitcoin for its properties as an open source monetary network. Now, I gave you an example of two friends moving $1,000 from New York to Milan. That's cute. It's adorable. Imagine the entire global import-export industry with instant and free international settlement, right? Imagine the entire global remittance market with international and free global settlement. Imagine the entire global credit card industry with no merchant fees. I mean, use the open source networks of Bitcoin and the open source networks of Lightning. And Bitcoin, the network, will change the way we all interact and connect. This part, chapter 2 of Bitcoin, this part has nothing to do with monetary policy. This point has nothing to do with central bankers, with dollar depreciation, zero. However, there will be this virtuous, beautiful feedback loop between Bitcoin the asset and Bitcoin the network, and Bitcoin the asset and Bitcoin the network, and working together, the Bitcoin the asset specialists at NYDIG and the Bitcoin the network specialists at Strike and Lightning, they're going to get this chapter 2 flywheel in motion, and it is going to hum. It's going to hum. So just stay tuned for more.
Okay, that's all inspiring. I'm really excited. World changing.